What if I told you that turning a small investment of $100 into $10,000 is possible, and it's simpler than you might think? Many of us dream about growing our money, but it often feels out of reach. In this video, I'm going to share my personal story on how I transformed a modest $100 into $10,000 using a simple and effective investment strategy. And the best part is, you can do it too. So stick around as I break down the steps that helped me achieve this goal. When I first started investing, I didn't have a lot of money to work with. But I knew that the key to growing my wealth wasn't necessarily how much I started with. It was all about having the right strategy and mindset. The strategy I used? Dollar cost averaging. This is an investment approach where you consistently invest a fixed amount of money into the market over time, regardless of market conditions. The beauty of dollar cost averaging is that it takes the guesswork out of timing the market and helps you avoid emotional decisions. Here's how I applied this strategy. I started by investing $100 into an index fund. Index funds are a type of investment that tracks the performance of a broad market index, like the S&P 500. The reason I chose an index fund is because it offers diversification, meaning you're not betting all your money on one company or stock. Instead, you're spreading your risk across many different companies. It's a low-cost, low-risk way to gain exposure to the stock market. Once I had that initial $100 invested, I committed to regularly adding small amounts, $50, $100, sometimes even just $20, every month. By contributing regularly, I was able to take advantage of market dips and buy shares when prices were low. Over time, as the market rebounded and grew, my small investments began to compound. Compound growth is one of the most powerful concepts in investing. Essentially, the money you invest earns returns, and then those returns start earning returns. It's like a snowball effect. The longer you stay invested, the more your money grows. I didn't have to make any big, risky moves or time the market perfectly. I just kept investing consistently, month after month. Another crucial element that helped me was patience. When you start with a small amount of money, it's easy to get discouraged because the growth might seem slow at first. But here's the thing, building wealth takes time. The stock market has historically gone up over the long term, even though it experiences short-term ups and downs. By staying patient and keeping my money in the market, I allowed it the time it needed to grow. There were times when the market dropped, and it was tempting to pull my money out. But instead of panicking, I saw those dips as buying opportunities. I stuck to the plan, kept investing, and eventually, the market rebounded. Over time, my small, consistent investments grew into a substantial sum, $10,000. It didn't happen overnight, but it did happen faster than I expected. Now, let's break down some actionable tips you can use to apply the same strategy. Start with whatever amount you can. Whether it's $100, $50, or even $20, just get started. Don't wait for the perfect time or think you need thousands to begin. Choose an index fund or ETF. These are great options for beginner investors because they offer diversification and typically have low fees. Stick to a schedule. Set up automatic transfers to invest a fixed amount each month, so you don't have to think about it. This keeps you consistent and helps you avoid emotional decision-making. Be patient. Wealth doesn't grow overnight. Trust the process, keep investing, and let time and compound growth work their magic. Reinvest your earnings. If you're earning dividends, reinvest them to buy more shares and further accelerate your growth. By following these simple steps, you can start building your path to financial success. Remember, it's not about how much you start with, it's about being consistent and making smart, informed decisions over time. To sum it up, the keys to turning $100 into $10,000 are starting small, investing regularly, and staying patient. Dollar cost averaging allowed me to take advantage of the market's natural growth without needing to predict what the market would do next. By focusing on long-term gains and resisting the urge to make emotional decisions, I was able to achieve my financial goals. And trust me, if I can do it, so can you. Thanks for watching. If this video inspired you or helped you understand how to start investing even with a small amount of money, make sure to give it a thumbs up. Don't forget to subscribe to the channel for more tips on growing your wealth and making smarter financial choices. And if you know someone who could benefit from this strategy, share this video with them. See you in the next one, and happy investing.